Home loan rates have never looked this attractive in India. The current rates being offered by banks are some of the lowest that we've seen in a long time. Look at how rates have moved historically, and we're looking at the two of the largest players in the home loan market, State Bank of India and HDFC's rates. From a high of 10.7% in 2011, they've crashed all the way to 6.9% now, more than 4% lower through various regimes of base rate, then MCLR linked, and now repo linked rates. Now cut to the present, and if you were to take a home loan today, you could get it for as cheap as 6.7% from Union Bank of India, which is for the category of women borrowers with a good CIBIL score who are also salaried. Bank of India at 6.85%, State Bank of India, HDFC and Axis Bank starting at 6.9%, ICICI Bank, Kotak Mahindra, Bank of Baroda not too far behind, and Yes Bank is an exception, slightly higher rates here. Now let's also look at some of the offers on home loans by the largest banks. State Bank of India has waived off the processing fee. It's offering discounts of 5 to 10 basis points depending on what app you're using. HDFC Limited, the monsoon bonanza and special offers of loans of up to 90%. ICICI Bank is also processing fees for those home loans start at about 3,000 plus GST. Bank of Baroda similarly has waived off the processing fee and is offering lower rates for the festive seasons. Now, while this does look tempting, here's a few things you should keep in mind if you are considering taking a home loan. First is compare all of the interest rates available to find the cheapest option for you in terms of rates, the types of loan schemes that are available and best suited to you. Look at the fine print to make sure you see all the terms and conditions to avoid any unwarranted surprises in the future. Look at all of the fees that are attached, the documentation fee, processing charges, late payment, prepayment, legal fees, so on and so forth. And lastly, do consult your tax expert or your chartered accountant to make sure you can get all the tax benefits that are available to you on your home loan. You can claim up to 2 lakhs tax exemption for the interest component and 1.5 lakh on the principal amount and so on under the current IT rules. Now onto the factors that will influence the kind of rates the banks finally offer you. The first and the most important thing that they look at is your credit score. Now banks always look at credit score when you are applying for a loan, because if you've had a good credit history with no defaults, you are more likely to get a better rate from the bank versus another customer who may have a bad track record. Second, a stable high income is rewarded with a lower interest rate because banks perceive a lower risk of default for this category. Third, the employment type also matter. Typically, you will see salaried applicants do get slightly lower rates compared to self-employed. Fourth, interest rates also depend on the size of the loan that you take. Fifth, the more money you are able to pay upfront as down payment, the lower your EMI can be. And lastly, you can look at the type of loan, fixed or floating rate loan. Typically, floating rates tend to be lower than the fixed rates on average is what we've seen. Now, why are we talking about home loans in the current context? Well, historically, if you see, home buying is the favorite tool used by policymakers to rev up the economy for several reasons. For one, everyone wants to own a home and will take loans if affordable. And second, the housing sector has linkages to several others like steel, cement and what have you, and therefore they have a multiplier effect triggering the growth of other sectors along with it. Now this also assumes significance because credit growth is languishing at a little over 5%, and therefore banks are doing all that they can to lure customers amid this festive season, not just with home loans but other segments as well. But will the customers sign the dotted line? We'll find out soon enough.